In this order flow breakdown, I'm going to be going over the reasoning for taking this trade, but not only that, the reasons why I was able to extract a 3.5R overall from this trade using order flow, TPO, and actually like my statistics-based evidence kind of giving me the reasoning to hold a trade for such a long period of time. So let's get into it. And basically, I'm going to first of all start you off with a bit of an understanding of the market context, because the market at this moment in time, when I took this long trade, if we just hide both of these factors here, the market at the time was downtrending, okay? The market is downtrending, being that, you're creating this high. You initially had this high here, which then after that was put in, you just started to downtrend, 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 lower highs after lower highs, okay? And what I was noticing at the time, and I'm always very aware of a downtrend's characteristics, okay? And in this case, you had a few characteristics of this downtrend that I wanted to be aware of. The first one being that whilst you've been pivoting towards the downside, you would essentially left a poor high behind, and this is the poor high up here. I'll show you an example of that on the TPO now. So if we just head over to Exocharts here, head over to this daily TPO chart, and if we just go back all the way up to here, yes, so you're downtrending, right? You're down. This is the whole way. You got your high, you're downtrending, and this is where the poor high was formed up here. You can see where there's more than one block on the TPO. And in relation to this, I'd actually highly recommend going and watching the forming a bias video so you can understand a bit about poor highs and poor lows a bit more. But this is a 2 block on the TPO, this is a poor high. So understanding that this has got left behind is great, but how does that then benefit this long trade I'm then taking after? Well, first of all, I know that these poor highs and poor lows are most likely to be revisited within 3 days of being put in. So, this is the first, put in, and then 1 day, 2 day, 3 days later, I know that within the first 2-3 days, there's a high likelihood that this high is going to be tested. So like any sort of further drop makes sense for me to be looking for a long. Now, how I got into that long is a bit of a different one, and why this SFP was almost perfect in terms of waiting for time in behind it, which I've again covered within the liquidity aspect of it. But okay, this is the poor high. This is why I'm targeting up towards here rather than taking profit too early, okay? If I'm taking profit too early, I'm not going to be extracting the highest R multiple from this at the end of the day, thus meaning I'm going to need a higher win rate overall to become profitable over the long term. So if we just head back over to Exo trading view here, this is the high I'm targeting. First of all, if we just highlight this as well, it looks like a basic SFP, but there's a few things behind this that I'm going to dive into in terms of this kind of structure here, because you front run the initial low. So if we go on the 30-minute time frame here, you had this initial low, okay, before. If you want, please do go watch that liquidity video back in terms of looking for the gaps in price action. But here you can see we had this massive gap here in price action underneath this, okay, bit of a bright color, but we'll extract that down. Bit of a gap in price action, and if you price to acceptance into that, you're likely going to be seeing essentially a bigger drop to the downside, okay? But going back onto that lower time frame, price front run it on the 5-minute, okay, before then going sideways for a period of time, then swing failure patterning, and then seeing a massive rally in price. Now I'm going to discuss first of all what happened here before the drop, and then like the characteristic why this drop was really good, and how it didn't consist of many trap traders but gave us a massive rally, and how I basically profited off that, and how I then managed the situation from there. So again, bear in mind, this is a front run of this initial low being taken. So if we just head back over to Exocharts and head over to here, maximize this window, I still got it up here. But you can see here, this is that initial low, so that front run being put in, right? The front run here. And then you've got a period of time where price goes sideways before then sweeping the low and seeing a decent rally in price action. I must admit, I must say, if you want this template, just go over to my Twitter. There's a tweet, just retweet it. It will automatically send it to you. I'll leave that in the description below. But here you can see you've got this low on the chart. Okay, you swing failure pattern it before rallying up. But what happened within this period of time here, again, I went over this in the liquidity one, is really, really important. If we just take our dynamic profile tool in this case, okay, so if I just hit the D button on my keyboard, again, you can set up hotkeys for this, highlight all of this price action here before the drop, before the actual lows put in. Again, we can put this onto like something if you want, like this one here. But regardless of the profile here, I'm not paying attention too much to this exact profile. I'm paying attention to the figures above it, the open interest and the CVD. So the CVD in this case is referring to the amount of aggressive buyers coming in, and the open interest is going to tell us, is that new people longing or people, closing out of shorts. And this CVD CVD is increasing, open interest also positive. This within the segment before the lows put in, before the drop, we're seeing a lot of new longs. Now, heading that back over to TradingView, that information simply just told us that within this segment of the chart here, right? Exactly the highlighted stuff in orange. There's a lot of new longs going on there before a pivotal liquidity level was actually taken in the chart. Now, you'd be thinking you need to see trap traders on the drop here. You don't. My anticipation of this trade was when this low is taken, you're going to first of all take this low. You've been going sideways for a bit. You're generating a lot of stops. This is the point. You're generating people who have been longing all of this, bearish CVD forming, whatever, right? Where are they going to be placing their stop loss? They're not most likely not the most intelligent of traders. They're most likely placing their stops below this low. Okay. So the idea for myself was I basically anticipated this happening, but I only really took the trade off of the reaction. I'll show you where I entered. Okay. But people are longing here, placing their stops below it. This is like where a lot of people are just getting stopped out. So rather than needing to see an open interest increase at the bottom here, I was like, okay, I'm comfortable in seeing basically open interest decrease because that would show me that these traders are getting stopped out. Okay, and then price can move in the direction they had initially wanted price to moving because they've been stopped out. So if we just head over to Exocharts here, you can then see the subsequent drop after that price action was a spike in volume. Okay, and you can actually see here, by the way, before that, you're kind of forming this bearish CVD where you got CVDs really increasing, open interest spikes are increasing as well. Before you see the drop, you actually see here, so there are a few things to note here, running through my brain, volume spike. So look at the last, again, very simple thing I go over on Twitter. Look at the last 20 candles. Okay, you're at your key level of interest now. Look at the last 20 candles. What's the average of those last 20 on, just the mindset? You can very quickly check this. Like my brain is very quickly in terms of checking this now. What's the last 20 candles on average? How does this candle compare? Is it a spike? The last average I would say is like 2-3 million. Here you got 612. Those are outliers for, but this is 14 minutes, a spike in volume. Cool. So that's like step one. Step two is, okay, we've seen a trapped value area. So a trapped value area, you've got the open of the candle here, a wick down. The value area is the highlighted part of the candle here. Okay, and you've closed all the way up here. So, trapped value area, you've trapped all that value area. And what's going on within that value area? Well, you've got open interest decreasing. Remember what I was saying before? We expecting that because we saw a lot of people newly longing before, thus anticipating their stops being hit. When stops are being hit, that's people exiting the market, therefore seeing a decrease in open interest would be expected. Once we saw that occur, okay, so open interest decreasing, spike in volume, trapped value area so far. Those are the things, and we swept the liquidity now. Point of control is near the bottom of the candle. Again, this is also added confluence in my opinion. I like to see this rather than like it being towards the top of the candle. This shows that you've left all that volume behind, right? Not only that, but now if we just look at the delta, right? Look at the delta, it's extremely negative. Well, extended negative delta. Look at this delta minimum, okay? Delta minimum is minus 6.9 million, but the candle closed green. If you've got more selling than buying within a candle, in most aspects, you would expect the candle to be going down, right? But the candle is going up. So you've got that kind of divergence there alongside the confluences of the spike in volume, understanding for myself that all these people who had longing previously are now stopped out more than likely because you can see that decrease in open interest. And as soon as I see that, so as soon as I see that candle close green up here, I don't need the perfect entry. I'm not laddering in, right? I'm not like placing orders here because I have to wait for the reaction. I'm reading this in real time. As soon as I see this candle close up here, right, what am I doing? Go over to my in silico terminal video. This is all tying into one now. Go over to my in silico terminal video, and what you'll see is I set my limit orders to just go bang, 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 bang. Right below, scaling in 5 orders directly below current price action. Those orders get filled. You can actually see that. Those orders get filled on this wick here. And as soon as they're filled, I'm given this really decent opportunities like this, right? And rather than targeting for general highs, looking for a 1R, my target honestly was looking for this poor high to be taken out. Okay, that poor high, because I knew the probabilities of it. So obviously I took a bit of profits along the way because I don't want to. My first initial take profit was up here, and that was like 30-40%. But the rest of it, like I closed like another 30-40% once we come up and took that poor high. And then the rest I literally closed upon like a bit of this dropping here. So again, that's how it kind of came up to be like a 3.5-4R trade overall within that kind of segment there. But more importantly, I wanted you to really understand, and I do also want to clarify this, the stop loss was hard. It was a hard stop loss in place. If price came down here, I would be stopped out. I want you lot to understand the aspect of understanding what happens before a low is taken is really quite important in relation to what actually happens when that low is taken. Understanding there was a lot of new longs opening here gave me the aspect to go, okay, when open interest decreases down here, that's all good to be taking a trade because I know those longs have now been stopped out. Price can go in the initially intended direction they wanted it to go in, and I can essentially benefit off of that because of those longs being, relatively stupid in terms of their stop placement. So that's how I took the trade. That's how I benefited off of it. Again, if you're a newer trader, I recommend using hard stops only. A lot of this stuff is actually in relation to a lot of the previous stuff I've been discussing in Silico Terminal, poor highs, poor lows, forming a bias, stuff like that. So go watch those out. I hope you enjoyed. Thank you very much.